February 25th, and there's only one day left in the month of February. And like I mentioned, I was a little bit thinking that the market would just try to rally into the end of the month, because sometimes we get that kind of month-end rally sort of scenario with people just wanting to kind of block out the portfolio a certain way. It's really funny because there's just so much going on, so much to think about. When you have these sharp market movements, as we've been saying, you kind of want your shopping list of things that you want to buy, because when the correction corrects itself, you really can really set yourself up nicely for the rest of the year. And I kind of want to go through some of that, but I also want to go through why we feel the way we do on the macro front, even though it looks like the sky is falling. I would say that from a news flow cycle, this Ukraine news and Russia invading the Ukraine is a big deal. It is a big deal, but it still, one way or the other, actually benefits the United States. As much as I have very, very passionate feelings, like I do have some friends trying to get out of the Ukraine right now, so keep that in mind. I still have to be very direct and very honest about what I see and how it would typically be interpreted by a market participant who might be at a bigger shop. So I am going to go through that a little bit. It was a very eventful week in the marketplace from a macro perspective. So macro is very much so driving what's going on, even more so than valuation or anything else. And when that happens, that's when you really do get the most acute opportunities. As we mentioned yesterday, Google is by far one of our favorites because it is absolutely a massively undervalued stock. So I am going to try to go through as much of that as I can, but trying to get my friends out of Ukraine is right now a priority for me, so that's kind of where I'm sitting. All right, best we can here then. Google, we're going to go through in a bit, but let's just go through some of the macro. GDP came out yesterday, and I think a lot of people missed this because this is the really the correction of the number, and it corrected upwards. So we have talked about the strength of the U.S. markets, and I have told you that I don't believe that the rest of the world is as strong. And I didn't put those slides in the deck this time, but I will add them for next time so you can see it very clearly. It just has to do with how companies are reporting. A lot of them are reporting very strong results in North America and then Latin America, depending on the industry. Asia seems to be very mixed, and Europe is not necessarily good, again, depending on the industry. And that's particularly true of how business recovery is happening versus the United States. I see that in American Express. I see that in a couple of the other card companies, although personal consumption, personal transactions still continue to benefit. I'm not seeing the same strength. Now, you add to that this Russia situation, and a lot of people, they just need to have a looky look at a map, because I feel like sometimes they miss what a map looks like and what that region looks like. But the cruise lines came out and reported yesterday. Norwegian we knew was going to be an issue, and it really did need to do. I think it did. In some ways, it did better, but you still have the secondary offering, and quite frankly, everybody's like, oh, it's going to be great. All this Russia stuff is going to be resolved by the summer, which is the high season for us. And it is true, the summer months in the Mediterranean are the key clutch seasons, but it is also true that that stuff starts in spring. So you start to move the ships from the Brazil southern hemisphere. Usually it's like Brazil and the Caribbean. Those ships typically, if it wasn't that COVID is its deal, those ships would typically move back across the Atlantic around March, really it is. And you would see and that's so the idea is that by April, those ships that were redirected during the winter months from the Mediterranean to the more profitable Caribbean and South American areas would then be available and profitable in Europe. It's actually very interesting. These one-way trips, actually, in case you love travel, actually end up being some of the cheapest cruise line tickets you will ever get, and really, really fun and enjoyable experiences. But obviously, that's not the anecdote we're talking about today. The idea is that if it's not resolved by April, the cruise liners are a little bit full of it, trying to suggest that Russia will be a non-event for them. Because the Ukraine sits right on the Mediterranean, Ukraine is close enough to the Mediterranean where you can't just rule out that some people might want to just avoid that entire region, period. Now, Could they reroute to another area? Sure, they could. You know what I mean? Like Spain is a huge port city. You know, all of those ports over there are probably a little bit farther away from what's going on. Probably fine, but we do have to kind of watch that, especially on travel. So be aware of that. Additionally, I have said before that, you know, this is really in many ways, not the only way, very much so oriented towards Nord Stream 2. Okay, now I think it's become a little bit more than that now that the invasion has happened and we're starting to see incrementally more where, like how far this is going to get and how it's going to play out. But, you know, the fact is, you know, Russia does have a very strong hand as relates to oil and gas going through this. I would encourage, if you guys are doing reading this weekend, to take a look at the Georgian conflict that occurred, how that played out, and what sanctions came out for Russia. I think it'll give you a bit of insight into why Putin just feels like he can do what he's doing and what might be any kind of response from the United States as relates to what for a lot of people feels like it's something that shouldn't matter because it's so distant from our land. I get it. I understand that there are people that feel that way, the United States versus, oh my gosh, this guy's making a land grab. Do you know what I mean? But please do review that. I think that would be really helpful. Now, I also want to just talk to a few other things. This I will post into the Discord for anybody that's interested. This is the 2021 data on Russian trade with the United States. So it's, you know, some people are like, does Russia matter? Does the Ukraine, like, how do we really think about this? And I get that, you know, I mean, it's really hard to know all economic data all the time. And I just want you guys to see that one of the areas that is rallying, happens to benefit us because we are very long mosaic, is this minerals area, which is typically where you would shove the phosphates into. You wouldn't necessarily put it in agriculture. We are a net importer by a lot of nitrogen in particular. This has been part of the reason why I think that the nitrogen story is a little harder to think through. Now, we are also a massive producer of nitrogen as well, just because we have this beautiful, wonderful country with blessed land on it. But, you know, this, you know, but these minerals is also a whole mess of other stuff, So, but if you were trying to look for it, it would be somewhere here. Chemicals, to some extent we do, but this is, most of these I think can be transferred to other sources throughout the globe, and then so on and so forth. Base metals is a big deal, so that is why we continue to be very constructive on a number of the securities that we've talked about in basic materials, and of course in oil and gas. We are a net exporter, so that's not going to come up here, and even if we wouldn't necessarily be getting it from that source, we would probably go to South America because it would just make more sense given where our corporations are laid out. Now, I also want to talk to this because I know this question probably is going to be top of mind this weekend. Russia is the 15th largest country that we have a deficit with. It's important and it's relevant because this is still number 15, but it's just, I wanted to give you some context on that. Additionally, I really want you to see how big of a debt, like in contrast, how important China is to the United States, because there is almost no way that this continued conflict doesn't start to dance between the three powers that be. And so it'll be good, because I do think this is going to be the year of geopolitics for the markets, to continue to just come up to speed on all these little nuggets so that you can really tell when the press is feeding you a line of malarkey because they just haven't had a chance to process whatever happened, and then you can make your own decisions for yourself about what it is you want to do in your portfolio. All of this stuff will be posted in the Discord. Subscribers have access to the Discord. All my information is very public, including where I get it from. There is nothing that I'm doing other than compiling massive amounts of information. Hopefully you think of it that way, and then trying to understand what pieces are the most relevant to talk to you guys about. Okay, last thing I really want to just mention is, again, remember the U.S. is in actually a pretty good spot. Personal income came in. The PCE numbers usually aren't ones that people care that much about because, quite frankly, CPI comes out before PCE and takes the wind out of some of these thought processes about, is there inflation? Is it causing a problem? But I actually think PCE right this minute, because we're all trying to get a picture of how strong the American consumer is is going to be kind of relevant. And here we continue to see pretty decent numbers coming out. Now this is flat. And the reason this is important, Jan 2022, is that there's no more stimulus at this point. We're still seeing people hang in on personal income. Disposable income is actually up. Okay, now don't worry about this chain $2012 thing. You know, basically people were able to spend more in the month of January relative to last year. And that's great because we're also seeing it December, November. So you think about last holiday season, COVID's making it weird anyways. This holiday season has some kind of comparable weird, not perfectly comparable, but we're still seeing the consumer hang in there, which is great. And then that's good because we are getting the inflation, which was already iterated through the CPI data and so on and so forth. So right now it's kind of a game between inflation, whatever we could do on monetary policy side, and how strong is the consumer? Like how much can the consumer handle this kind of weird environment? Couple things I wanted to mention along those lines. I am seeing a tremendous amount of news flow that suggests that the inflation that happens with oil will necessarily cause the Fed to raise rates. I just want to say it one more time. Raising rates can impact a lot of things, but it cannot bring the price of oil or food down. That is why those numbers are quoted, ex food and energy. It was something that we learned in the most painful effing way through the Volcker period. Okay, that was what the 70s deal was. That was all what it was about. And like, you know, I don't know why this isn't like an obvious one for the news flow items, but for whatever reason, I guess people just love inflation and the idea that it's going to necessarily raise rates. Just think about it this way. If this continues to escalate and it creates kind of a shockwave of weakness to various economies, I don't see like we really have to hear some very specific arguments from the Fed because, you know, he's no dummy and he said it before. Some of these things which are structural are not going to be impacted by interest rates, and then there's other risk. So what we really, really should care about right now is we should care about how is employment going, okay? Is the consumer hanging in there? And then who exactly do we mean by the consumer? You know, this administration and the Fed has been really, really, really good about saying when we're interested in employment numbers going up, personal income going up, we are also checking to make sure that that's not just a very specific set of privileged folks and excluding the people that this economy is supposed to benefit, that this American dream is supposed to give opportunity to across the field. So I really just want to make sure that I've said that because I know that the news flow is coming out a very particular way. I can already see it through various things that people are sending me on the back channel to try to figure out how to think about the activities, oil prices, etc. Now, I do want to just take a look at that really quick. It's very strange to me that oil is trading down to 90 bucks. Like that is bizarre, okay? So I almost think like you guys just got to be really careful out there right now. Interestingly enough, the oil equities are responding. To me, this is just kind of some kind of weird, bizarro reversal. This idea that the conflict has de-escalated from yesterday to today is loony bins. And again, our whole deal has nothing to do with any of that. So I also want to go through EOG because I've been very bullish EOG and I'm very unhappy with the way the stock's been treated today. A couple of things. The immediate flow off the news feeds was that they missed earnings. Okay, they missed earnings 309 versus 321 or something like that. Here's the thing. They issued a $1 dividend, special dividend. That's why they missed earnings, because they actually just gave that money straight back to shareholders. Additionally, they announced that they can actually produce oil at that $40 because they basically lowered their cost of CapEx as well as they just can. So, I mean, they are going to continue to be the low-cost producer of oil for a while. The one thing that makes me a little bit frustrated with EOG, and they got really pushed on this, and I have no clue on this earth, why they feel the way they do, because I don't think that's a great answer, and I do think if you're an investor, that might give you pause. If you're in the options market, if you're in the equities market, it should give you no pause. You should buy it at this dollar value. And that has to do with how they want to return that money back to shareholders. They want to return it via dividends. So they're going to keep issuing dividends as long as they keep making money hand over fist. Again, their break-even cost is 40 and under, okay? So it's like a joke right here at 90 bucks. But if they're going to give it back through dividends, then yeah, the stock's going to basically hang out. You are going to get continuously lower PEs because that's what happens, and it really happens. The other industry that has this is the REITs. But as far as like all the other, I can see how that would really mess things up a bit, because quite frankly, if they just, instead of giving that $1 special dividend, bought back their stock, that's a ridiculous amount of stock to buy back. It would take anyone that thinks that they should be shorting this thing completely out of it. So you know, try to understand that dynamic in this stock. The fact is, they grew the top line 20-something%. The bottom line was like 40-something%. This thing is doing extraordinarily well in this environment, and that's what I'm going to say on that for now. Other final things I kind of want to go through. Oh yes, you know, people are just starting to look at the fertilizers. I'm going to just remind everybody. Oh, sorry, I do want to give this one. This on energy. I want you to just. This was a great data viz. I love a good data visualization. Y'all know that, like, I'm actually a data science professor as well as a part-time job with Franklin University. Big fan of that university, but I love this data viz that came across my desk. This is from 2016, and you can check the 2020 data, and you'll see these circles would fall out approximately the same. One of the big things about Russia is that although they are a massive commodity producer, they are not a massive commodity consumer. These circles illustrate that, whereas we are. So in some ways, if you're trying to understand what Biden was trying to do, he's trying to get this circle, the dark part of the circle, which is consumption. The circle itself, that's the outline, is production. He was trying to get us to stop doing this. Hey, Richard. He was trying to get us to stop doing this dynamic by like trying to cut us out on oil, like really be the EV specialist and get us there faster. Because unlike Russia, who has all this power, you know, if you look at all these circles, they're gigantic circles and they're not producing at all. This is what I mean by there are very few oil producing countries in Europe other than until you get into Scandinavia, right? Like this I think illustrates it beautifully. And then you got China over here. Right? So this whole idea that China has plenty of freaking energy is ridiculous. Look at the circle, right? So I want you guys to really, I'm going to show you as many of these visualizations till you feel very confident that when you hear BS on the news that you feel comfortable calling it out like I do. Okay, so I think what he was trying to do is he was trying to get this circle down below, you know, consumption below production so that we would have a stronger power. What he's actually done is just made it really hard to produce more. Unless the prices go up. So we are, like, EOG's commentary I think is really beneficial for EOG, but doesn't necessarily, you know, it's not the greatest thing in the world. Anyway, I wanted to show you guys that so you could just see it. And then the final thing is that it's interesting, you guys hold your mosaic positions because people are just starting to talk about fertilizer, which I think is insane. You guys know I've been really bullish fertilizer probably since the middle of last year, but definitely got really aggressive on Mosaic, as you guys know, in November when that sale happened and Vale punted all their Mosaic. But like, you know, Russia is a huge producer of nitrogen, a little bit less on phosphate and potassium, but you know, in some ways this does make me a little bit more bullish CF, but you also have to realize that there is another dynamic for nitrogen that has to do with the price of fuel, and so it's a little bit less clean. So just kind of like hold your mosaic positions for now. It's just something to take note of in this environment. Now the last thing that I'm going to talk about today per request is Google. Let me just make sure I put the Google slide up here. So I just want you guys to understand the thing with Google that you gotta realize, and this is stale, I think. I just want to show you this. Google at 2,600, it's now trading a bit higher, so let's call it 23 times without doing the math. Its top line growth, I didn't put it here. Its top line growth, let me just do this a different way so you can see it. people were like, what do you mean by PE to growth? Like, how does it matter? I don't understand. And I get it. There's a lot of different ways to look at valuation. And I try to think from my personal perspective, what are all the different ways that someone might think about valuation such that they could even bother to make a valuation argument. But one of the ways to do it is PE to growth. Now, PE to growth, I'm just going to tell you, really only makes sense if the company has stable top line and bottom line growth. Not stable, but at least you can somewhat trust those numbers, okay? It does not make sense if the growth rate on the earnings line is ginormous because it went from negative to positive, or because it is literally for the first time making money. And the reason PE to growth is a bad metric for that is because the thing is, if you do PE to growth using that metric and you can't, and that company doesn't have a stable set of cost, right? So like we don't know what the supply chain is going to cost them from one quarter to the next, then it's a little bit dangerous, okay? If it's in an industry where the costs just go very chilled out, you don't have like actual supply constraints that can really jump that operating cost aggressively every quarter, then it's a little bit more of a slightly safer metric. So I'll use it for those industries. But if you're going to do it in a more growthy industry where literally every quarter, you know, and it's not about the earnings for a while because it's really about all of the money is being spent to grow the business, which is what like a snowflake should be doing, quite frankly, then in that case, you can, a lot of people will use the growth rate on the sales and do kind of like price to sales to growth, assuming that you're going to get margin expansion at some point and a terminal growth rate on the top that is much lower than the bottom. But we can go through that in more detail. With a company like Google, though, it is unambiguously value, because if you look at Google's statistics here, go to this Yahoo Finance. I'm just going to use this. The numbers, you should always double check these numbers with the actual release. It just so happens that I have done this already for this stock, so I am fairly certain that I can trust Yahoo Finance's data feeds. So here you'll see that you've got revenue growth of 32%, and you've got earnings growth of 35%, which represents the fact that you've got beautiful, you got a beautiful margin, you got a beautiful business, quite frankly, right? For every dollar they earn, they do get economy of scale. It's beautiful, right? Okay, and you've got earnings, forward earnings estimates, but even trailing earnings estimates are cheap, right? Like that's crazy usually. But forward earnings estimates is somewhere around a sub 23 PE. So what that means is that this company is growing at this company is growing its income, net income, which is what you get as the equity holder, at a rate of 35%, or you could say, no, it's growing at a 32%. I think this is just a good quarter, whatever you want to say. So it's growing that for next year, but you're going to pay just 23 times for it, right? So by next year, all of those numbers are 30-something% bigger, and you're just going to pay something that's 20% bigger, which means like, if this continues over a series of a decade, eventually you're paying almost nothing for what is actually getting significantly larger and farther away from you, and given what you paid. So that is typical for this scenario, and hopefully I've not completely butchered how I'm explaining it. That's unambiguously value. And you'd have to really believe that the story at Google is just a one-year story. Like, oh, it's just this year that it's going to be like that. And if that's how you feel, I'd love to hear your comments on that. I don't believe that. I think that they keep catching another wind and will continue to somehow magically grow. I know they're 1.7 trillion, and some of y'all are like, have you lost your mind, May? But I'm just telling you, they are absorbing stuff faster than you can possibly imagine, and they're growing new businesses that people aren't even thinking about it. I mean, just consider, they own YouTube. Okay, YouTube doesn't typically come up as a discussion topic in the world of streaming, but you better believe YouTube is massive profitable. Okay, and if anything, people should be comparing Netflix to YouTube. People should be comparing a lot of the streaming businesses. I have no idea why I'm getting so many pings today. It's probably related to my Ukraine friends, so I kind of probably have to get off of this soon. But people should be comparing, you know, anyways, you got me. I'm not going to keep going there. So with that, I'm going to hit the pause button for a second and let you guys ask me questions on this beautiful Friday. Hey, Richard, what's up? Hey, David.
Hey, May, how are you?
I'm
so
good.
I bought my Pfizer.
You did?
I did, yeah.
I know. Pfizer's been such a weirdo. How do you
But it
feel?
hit
Like,
my target. I mean,
yeah, yeah, it did. You're really good on the charts, so I'm glad you came in, and I'm glad you also kind of had me stick my hands on my underneath my seat so I didn't hit the button. But yeah, yeah, no, that was a good buy. I mean, Pfizer's so damn cheap. Like honestly, Pfizer's really cheap, and at 20, like the core business is growing at 26 times. So as much as people want to be like, oh, it's all related to COVID, no, it's not. Okay, take a look at the actual earnings statement. So I'm glad you have that, and I think with that dividend yield, it'll be a nice one for many, many
well,
years.
I bought options. So
Oh, you did. Okay, so you're just going to trade it. Ah,
yeah,
okay. All right, fair enough, fair enough.
great price
I,
though. Great price.
yeah, you got a great. What did you end up getting it at?
45.70.
That is an amazing price. I mean,
I
I'll tell
bought
you
more
what I did, which
today.
was really, yeah, nice, 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 nice. Yeah, I think that stock will ultimately be a double because at 8 times earnings, even if it was still trading a discount to growth, it would be trading. It would have to double, right? Like, I mean, that thing is so undervalued right now. It's stupid,
I'm going to keep
and it
buying it
has
until it
so much
hits
cash.
50. Once it hits
What's
50,
that?
I'm going to keep buying as long as it's below 50.
Yeah, that's probably the right call. I probably, as soon as all this earnings season gets past to where my markation for it, I probably should just do a video just on Pfizer. It's so, I don't even understand why it's misunderstood. It's so well covered, and there's so many people that research it. It drives me a little nuts, to be honest. Anything else going on? How else are you looking at things today? I mean, the whole screen is green. Finally, it's nice to get a
Yeah,
break.
for another day. I mean, I think until next week.
Yeah,
Basically, everything's hitting key resistance areas now.
yeah, yeah. I'm trying to get some cash too for next week as well. Anything that I've got residual, I'm trying to close out where I'd like to just kind of not think about it this weekend. So
Yes, I bought Nvidia yesterday, which had a nice
yeah,
move, nice strong move. Also, I bought CVX Chevron, which didn't do well. And then this morning, of course, it took
yeah.
off. So it
No,
made a
it's
new high today, and I sold
yeah,
out.
yeah. It's really weird right now. In general, all of the energy stocks are massively undervalued because I think everybody is trading oil around Russia, and they should not be. They should be trading oil around the massive shortage that exists.
Right.
And Russia does not make it actually better in any way that the shortage, you know what I mean? Because essentially right now, um, you know, so we released our reserves already. So I love how we pretend like we haven't, but we have, right? Do you know what I'm saying? And then we're going to have to possibly at some point buy them back. Europe is probably going to have to release just to get through this little, let's call it scuffle in the Ukraine, because I doubt that stuff is being piped in as it normally would, given that most of the Ukraine has closed down at this point. So this idea that oil should trade down today is it's just something else.
Well, the charts basically, Schlumberger, I have trouble saying that word.
Yeah, Schlumberger, it's
But
okay.
that one for me, that is like a really good long-term play. The charts look great on that. They're
Yeah,
in the right place, right time. So that's the one thing that I would buy and hold. But
yeah,
yeah, Chevron is probably my oil pick.
yeah. I mean, they're all really great right now. Schlumberger, it's just because the equipment business is a little bit tougher. You know, the equipment business really needs production to start up again. So it's gonna, usually that would be an early stage play, and so a lot of people pile into it. The challenge is that with all of this uncertainty and all of these other things that are going on, people haven't really been, I mean, like it did a decent quarter, but it didn't, like relative to how the E&P companies did, because the E&P companies are just getting pricing on oil. Schlumberger didn't necessarily, like, I was hoping, because the equipment companies post before everybody else. The refiners, they were fine because this weird volatility that's happening between nat gas, oil, and other components of the crack spread just crushed it for them. And they were able to do it in a way that was really elegant. The pipes, no problem, right? Because a lot of them also have tanker businesses at the end of it.
Yeah, last week I was bearish, so I had puts, but it's consolidating, and I think it's consolidating
Yeah.
for a move to the upside.
Okay.
I
Cool.
mean, I
So
think the reason oil is down is Biden did not sanction oil.
do not sanction oil.
Yeah, against Russia.
Oh yeah. I mean, you know, he can't sanction oil. It would cut off Europe from oil, right? Like this game is really silly that's happening. You know what I mean? Like Europe doesn't, 40% of oil comes from Russia. Like if, and I think that it's like, yes, I can see why if someone doesn't understand the flow of energy across the globe, they would be like, oh, this is really bad for oil. But I mean, look, I really don't know another way to show it other than all of these 1001 charts I keep trying to show.
No, it's just short term.
Right? Like,
Brilliant.
yeah, it's super short term. Oh, yeah.
You talked about Mosaic months ago when it was around 30. I remember you
Yeah.
saying 37.50 because Morgan Stanley had taken down a block or something. Anyway, that's amazing. Nobody talked about fertilizer.
I know. And now they're all talking about it. So don't touch your Mosaic. These other people are going to drive it up. And they should, because the stock is undervalued. So I'm comfortable with them driving it up, even though they were all haters for a little while. Do you know what I mean? So yeah, thank you for that.
Okay,
I mean,
Ukraine. Good luck. Your
What's
friend
that?
in Ukraine. Good luck
Yeah,
for
I
your friend
know.
in the Ukraine.
It's so weird because you really don't think about how, like, these things are happening real time to folks. And like, even though, for us, it looks so different visually than for the Ukrainians who have to make a call every single day on what they're going to do with their lives and their family. And so I think even though there was so much news press, media, the Ukrainian president, did what every leader would do, which is like, things are chill, things are okay, this is just news press media. And so it was very difficult to try to like convince her to leave earlier, or to convince them, because now I'm realizing there's more than one person that's dealing with this in my circle of knowledge. And then she, like, one friend in particular woke up to the sound of missiles very close by where she lives, and she was like, shit. And I'm like, hey, listen, girl, you got to walk out of there. Like, there's not going to, we can't be waiting for mass transit to open back up at this point, my love. You need to just kind of pack your stuff and do whatever you can at this point. It's going to be awesome. So it's really kind of, it's a really, we forget all the people and the things that, why people make the decisions they make and how they make them and how all of this. That's why in some ways I almost hate talking about this circumstance, but it is a real thing, and there are a lot of people that are in a really tough spot right now. So prayers out there, positive vibes, depending on what your deal is,
Yes, indeed. Yes.
Yeah.
I do
Anyway,
have a question for you.
Yeah, what you got, Richard?
So I have a theory, but I'm not sure how to actually take advantage of it. So I think crypto is going to be really critical.
Oh my God, I'm
given
so
what's happening.
glad. I'm so glad you mentioned that, because I was buying BITO yesterday and I felt so bad that I didn't mention it when I got off the call. Yeah, go ahead. Sorry, keep going.
Yeah, so given the fact that, obviously it's going to be the one way that I think Russians can get around whatever banking sanctions there are, right? I mean, crypto is just available. Ukraine just decided that it was going to make crypto one of its currencies, so it's using, and people are sending crypto to Ukraine. But Mara and the other one is, what's the other one? Riot. So Riot is strictly Bitcoin, I think, when it comes to mining. Mara is a bit more diverse, but they're not doing well. Silvergate's doing fine. I think Coinbase might do fine. And Mara is just stagnant. Any thoughts on the Bitcoin
Yeah, I
miners?
mean, my thought is I don't trust the broker dealers of Bitcoin. That's really as simple as that. They're not
Okay.
regulated. I have no idea how to look it through their financials in any kind of real way. And also, it's unclear to me how they're going to be taxed given where they're domiciled. So I'm never going to, until I get a better understanding of how to think about those businesses, I would simply buy Bitcoin. And I would buy it using the BITO ETF, which obviously I have forgotten, unfortunately, to put here. Yeah, so yeah, I would just buy it through the BITO ETF. Got to actually pull that slide in. And the ticker is BITO. It trades very liquidly, and
Okay.
you can hedge it using puts easily. and you won't have any of those accounting issues. Because it's an ETF, you can put it in a retirement account if you'd like to and set it and forget it. And to me, yes, I totally, the news flow is going to go in one direction, and all of the silliness that people keep talking about how like, oh, it's just momentum trading value, blah, blah, blah. Look, here is reserve currency picture. This is what reserve currency looks like. It's 60% US dollar. This is from, okay, I'll try to get you a date on, 2020, okay? So 60% of reserve currency is US dollar, 20% of reserve currency approximately is euro, and then these are approximate numbers. And then you've got renminbi, which has made its way to 2%, but is still not a major reserve currency. In other words, if you're a country in Africa, Latin America, you're basically not a country that uses this, then in your reserves, so you can pay your foreign debt, and also so that you can be seen a certain way by the various powers that give loans, like the IMF and the EU, you gotta have reserve currency. And the US dollar is the most dominant strategic thing that America has created for itself. I'm just going to go ahead and say it boldly.
Sure.
I'm sure there are other things that are very, very strategic, but you got to give this one full props. And then the other thing that we did just to solidify that is this SOFR, which takes, since we're all coming off a LIBOR because of Brexit, we're now going to the secured overnight financing rate, which is essentially a risk-free rate of return. What is that? Everybody likes to pretend like it only affects the DCF models. That is like the tip of the damn iceberg. You probably do not know enough about the risk-free rate of return if that's what you think, because the bigger thing that it impacts is the entirety of the banking system. Because the risk-free rate of return actually then has an implication for how much every bank has to reserve relative to the assets it holds on balance sheet. So I'm just going to say that also very passionately, probably a little bit more aggressively than I should, but I want to really emphasize how big a deal this is. If you're a foreign country right now, you have your choice. You have these currencies, or alternatively, you can be like, I don't trust this whole deal. How about Bitcoin? How about gold, right? Because those would be the other two. Okay, especially if you're a mining country like Indonesia, something like that, Malaysia. I don't know if they still have gold reserves at this point, actually. Let me take that back. Indonesia for sure, because that's where Freeport-McMoRan is mining themselves as much as they can out of the ground. You know, and you know, I think there's still some gold in Canada. We probably have it, but do not actively mine it here. There's definitely gold in Latin America in a couple different spots. Gold is probably legit a reserve thing that you're taking in aggressively, right? The other thing, again, is oil, right? So oil, we can see that here. I don't know why there's not, okay, yeah, this is Venezuela. Yeah, I think that might be Venezuela. But like Venezuela had, like, if you think that it's just May's dream world that she's thinking about this, let me just tell you, Venezuela has already made a run at trying to not have their oil priced in US dollar more than once. So they're doing it a second time now. So it's not like I'm just a little bit confused as to what might be happening. Maybe I don't have it perfectly. I'm sure there's people that are deep into this, but the original use case of Bitcoin was absolutely for awkward scenarios in the world. And you got to believe that given what's happening in oil, or maybe you don't have to believe, I am suggesting potentially that this right here might be seen a little bit differently. Now, it is the case that Russia still is all about the euro, so maybe there's that. But if it were me and I was like, hey, May, what do you think? I'd be like, how do you feel about Bitcoin? Do you know what I'm saying? So I can't imagine that I'm the only one that thinks that, or at least is having that discussion. Hence, and I think Hope talks about this a lot as well. So he might be a lot smarter on this than I am.
Richard, with energy prices so high, it costs a lot more to mine.
Oh, that's a really good. That's a really good point too. Relative to, yeah. So you have so then you would definitely rather be in Bitcoin proper versus the miners.
Got it.
That's a good point. Although the technology that I'm seeing that's coming up in the miners is pretty next level. I'm very impressed. Some of the miners have come up with some elegant solutions to solving the energy difficulty. There's one little startup that I think is trying to use the flare off on some of the oil wells, which is pure waste, to then transfer the flare off into energy to then mine Bitcoin. These kids are so brilliant. I will never be as smart as some of these young people that are coming up now.
Who is doing that? That is brilliant.
It is brilliant.
Who's doing
It's
that?
some little startup company. I'll try to dig down the article that someone forwarded into my little inbox. But yeah, it's brilliant. I would give that kid money all day long because that alone, just the thought process, is really worth a lot. Anything else? You gotta
No,
get
I think
the
that's it.
kids are smarter than me. It's fine. I have no problem with that.
So Devon
This new
Energy,
generation.
any thoughts on Devon?
Devon actually to me is brilliant. I actually did take some exposure on Devon. I just did credit spreads because I was a little nervous yesterday when energy was doing its craziness. But I would be definitely long Devon right now. The whole set of the whole complex, Devon, Pioneer, they traded down so aggressively. They're like 10 times or something like that, 10, 11, 12 times. But they are additionally in the same beautiful spot. They, I think, need $5 higher oil price than EOG to make their cost of capital. Maybe it's somewhere between 5 and 8. Okay, like I don't have this perfectly memorized. Sorry, guys, but but we're nowhere near that right now at $90 oil.
Okay.
Why are you long? Tell me what you got.
No, I'm looking at Devon though, actually to go long. I mean, that would be the one energy company that I would consider.
From a charting
Um,
perspective, I love that. Okay, I'll take a look. I'll take an even closer look then, because here's the thing: they are returning like I think over $1 billion to via. I think they're going to do $1 billion and then in dividend. They're just going to give it back to shareholders, and then they're going to buy back. I think just under $500 million worth of stock, so 440 something million dollars worth of stock. So, and I didn't realize at the time that they reported earnings that they had traded down so much.
yeah, and just one final one. So Halliburton, they have experience, right, with this whole the world's in chaos. Let's talk about oil thing.
I mean, Halliburton is kind of like Schlumberger. They both do. Both have huge equipment businesses, and again, the earnings were good, but they weren't like, oh my god, topping it off, because it is like, it's backwards world. I think in oil and gas, as far as like who's profiting and why and for what reasons right now because of the conflicts that happen. I mean, do I think all should do really well, and do I think once everything calms down, the energy sector will trade in its traditional like pipelines are kind of steady eddy the entire time, and then energy equipment rallies first as a canary in the coal mine that all of energy is going to start producing more? Yeah, it's possible, but right now E&P is crushing it because the pricing they're getting is so ridiculous relative to anything they could produce, and all they have to do is chill out and put more rigs on slowly and in their own way and at the cost of capital that makes them happy. And by the way, the back end of the yield curve is actually starting to rise a bit. It rose pretty aggressively yesterday, so I wouldn't be surprised if some of them did lock in some numbers for the farther out in the mid 80s. Whereas a lot of them were like in the 70s. If you're gonna joke with me, like you're gonna give me $70 for my oil when oil is at 90 plus, OPEC's at capacity, and Russia is like deciding it just wants to shut off Europe's oil every other day, there's no damn way I'm going to hedge out like that. Do you know what I mean? So something to keep in mind as well.
Okay, yeah, thank you.
And just remember, like a lot of people are like, they're going to hedge it out entirely. Look, those are some of the smartest oil and gas traders around. They know how to use collars as well, so that it isn't, even if you're seeing the back end at 80, they're probably recreating it with the collar. They're probably also taking in some credit lower. So it's not a fully hedged position at 80 minus the premium, or wherever it is. I'm just saying.
Yeah.
Any other questions?
No, that's it. I mean, I did trade PayPal today as a sympathy trade with Square because Square, the options premiums because of IB was extremely expensive.
Yeah.
So I took
Yeah, I need to
PayPal,
do
which
more
was a
work on
nice trade.
Square.
But Square, I think, has trouble going forward. I think they've got a lot of headwinds with Apple getting into the game of a POS system. So
I got to look at it for sure. I don't know enough about it, but it affects so many stocks. So I kind of want to do a little research there and get smarter. Anything else going on? David, thank you for that heads up though on oil and gas. I was curious why it was doing crazy land today. All right,
You're
cool
welcome.
guys. Have an amazing, amazing weekend. Take care.